Guys, this is S&P 500 weekly technical analysis for the week of March 3rd. The S&P 500 and the Dow Jones have recently started the bearish cycle. While answering the question asked by one of my members, I mentioned that it is already 100% bearish, absolute 100% bearish. This doesn't confirm an immediate fall but starts a short-term bearish cycle. What does this mean? This means that the market will be allowed to move up to some point and then it will come down heavily. So now whatever you are seeing here, this is the short-term bearish cycle. And in this the short-term bearish cycle, the S&P 500 and the Dow Jones are allowed to get a bullish retrace to some level. To what level? To the initial zone in the bullish side. And at this zone there will be a struggle, and during the struggle when there comes a rejection or a failure, then there will be more fall. So you will notice a staircase pattern, like this kind of pattern. However, if for any reason, if the S&P 500 manages to clear and sustain and close above the zone, in that case it will enter into the neutral trend. And you must understand that the S&P 500 is still 60% bullish on the weekly charts. The long-term trend is still bullish. That is why I am using the word again and again, short term, not the long term, short term. Short term means 1 week, 1 to 2 weeks only, that's it. So how actually it is going to work, I will discuss in detail in this S&P 500 weekly technical analysis. Before I proceed further, let me give you a quick idea of what was anticipated or predicted in the previous week and what actually was seen in the market. So the last week it was not smooth. It was not smooth as we were anticipating. However, the movement was as expected with a little deviation. For example, on Monday, if you notice, the high was 6044 and the low was 5977 and the closing was 5983. So this was my midday update on Monday, and here I mentioned in these the bold letters, this also means that the S&P 500 should either trade above 60XX zone or around 604X, or should trade below 598X but not in between. Now comes Tuesday. So Tuesday the high was 5992 and the low was 5908 and the closing was 5955. So in the midday update on Tuesday, I mentioned that the S&P 500 came down, lost the key levels, and then tested the 593X and made an intraday low at 5908. But what we knew is that the 593X will be the worst case scenario with a possibility of a little dip to this level, okay, but with a confirmation that S&P 500 will recover to and above 593X irrespective of anything. And other than that, this fall on Tuesday was triggered because the S&P 500 failed to sustain at the tiebreaker, that was 598X. Now Wednesday was a little tricky because S&P 500 was trying to trade in the 60XX zone and the tiebreaker was 598X. And why there will be a heavy fall? Because coming down from the zone where it was seen struggling and losing the tiebreaker, then it will be seen as rejection, and this rejection will bring heavy fall. And irrespective of anything, S&P 500 will hold, sustain, recover. Now Thursday there was a very heavy fall in the entire market, especially in the S&P 500 and Nasdaq. This heavy fall because of the 11% intraday fall in the Nvidia, which then compelled the Microsoft, Apple and the other tech stocks to give up like 1% to 2%. So in my midday update to my Patreon community members, I have cleared these conditions that a sustained movement above the trend line and the level which was just above the trend line will bring a movement up to the zone, okay, into the picture in the second half, and a movement below the trend line and the level, okay, will bring 593x and 591x into the picture. However, the last 30 minutes fall, especially last 30 to 45 minutes fall, it was so heavy that the S&P 500 breached all levels and it came down and settled at 5861, the closing price. So the only thing here that I missed was the movement to 586x below 589x. And in my midday update to my Patreon community members, I have mentioned that the bearish side will remain limited and restricted to the 585x zone. And even if there comes a breach, then also it will be limited to 583x, and then S&P 500 will be in a condition to recover the zone 585x and will sustain above the zone. So yesterday on Friday, it was clear that S&P 500 is not going down anymore. Okay, it will hold, sustain, recover at the zone, and the only condition that we can see here is the bullish condition and nothing else. So other than these, the little deviations, the movement of the market was as expected, as anticipated. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I will quickly discuss the agenda of this S&P 500 weekly technical analysis. Here I will tell you that what all I am going to cover and how I am going to deduce the movement of the market. Okay. First point of the agenda is the S&P 500 technical analysis on the weekly chart. Okay, weekly chart. Okay, the situation was very bad when the S&P 500 was trading in or around 585x. Okay, but now it has improved, and similarly the Dow Jones has improved. So weekly chart has improved, and the 60% bullish condition, not absolute, but the bullish trend, long-term bullish trend is still there in the picture. Okay, and this is actually the bullish chart of the indices, the weekly bullish chart of the S&P 500 and Dow Jones is keeping the indices alive, is helping the indices to sustain. Okay, so I will show you the technicals and everything. Okay, and I will show you the weekly chart. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Now daily chart, okay, short-term bearish cycle has started. Okay, now whether this short-term bearish cycle will remain in the picture or if the S&P 500 will recover its neutral and then bullish trend or not, okay, it will be very much clear through the daily chart. Third and the last point of the agenda is the probable movement of the SP500 from March 3rd, which is Monday, through March 7th, that will be Friday. Now, whatever is going to happen in the market in the next week, okay, bullish cycle and then bearish reversal, or bearish and then bullish, okay, the key levels to sustain, fall, everything, that I will discuss in this, the last point of the agenda. However, guys, let me remind you that when I say the probable movement, when I come to discuss the probable movement here, then by that time I have already discussed 30% to 40% of this, the probable movement, in the first and the second point of the agenda. That is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the market, why that will happen, and how that will happen. Now guys, I am going to discuss the first point of the agenda here, and this is the weekly chart of the S&P 500. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, one candle means 1 week. Let's first discuss this, the last candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now this last weekly candle of the S&P 500 is a good bearish candle, and because there was very heavy bullish retrace in last 1 hour, last 30 minutes, okay, that is why a gap down open is not confirmed. Gap down open is not confirmed. Okay, yes, because it's a heavy bearish candle and the heavy reversal was seen only in the last 30 to 1 hour. Okay, but for the entire week it was heavily bearish. That is why on Monday, irrespective of any open, there will be an initial or intraday bearish movement. Now let's confirm the same through the Dow Jones. This is the Dow Jones. In the Dow Jones, the last weekly candle, this last weekly candle of the Dow Jones is actually a savior, not just for the Dow Jones, but for the entire market. Why? Because if you notice, it's a bullish candle. It's a good bullish candle. And other than that, the closing of the candle is above the moving average. Whereas in case of the S&P 500, closing is below the moving average. Okay, so S&P 500 is weak, Nasdaq is weak, but Dow Jones is the only index which is holding the market and is expected to support the market. Okay, so through the Dow Jones, no, gap up open is not confirmed. Gap up open is not confirmed. Okay, but yes, Dow Jones allows an initial or intraday bullish movement on Monday, just opposite to what was seen in the S&P 500. This is the reason why I always discuss the Dow Jones. Now let's talk about the technicals. In terms of the technicals, moving averages is still clear fan out, okay, but closing is below the moving averages, neutral. Bollinger Bands bullish, Ichimoku cloud bullish, and here I'm talking about the S&P 500. MACD is bearish and the divergence has started to increase in the MACD once again. Stochastic RSI is bearish. Okay, the saturation is not there, overbought, nothing as such. Okay, so once again the S&P 500 will be seen or considered as 60% bullish on the weekly chart. Now this 60% bullishness on the weekly chart, okay, also means that the long-term trend is still bullish. Long-term trend is still bullish. There is no change in that trend. Okay, in the short term there is a fall, there is a short-term bearish movement. Okay, but the long-term trend has not changed and is not expected to change, okay, until the end of the March. So what we need here is the back-to-back bearish candles. Okay, back-to-back. This means that after 15th of March only, means after 2 weeks, okay, if there comes back-to-back red candles, then only there will be a condition wherein we can say that early April, okay, the trend can change. So the trend, for the trend to change on the weekly chart, okay, it is time consuming. It takes 1 to 2 months, sometimes 3 months. Now the Dow Jones. In the Dow Jones, clear fan out in the moving averages. Dow Jones is bullish through the moving averages because closing is also above the moving average. And Bollinger Bands bullish, Ichimoku cloud bullish. Dow Jones looks good. MACD is bearish, stochastic RSI is bearish. Okay, so bearishness is there. But Dow Jones is more bullish as compared to the S&P 500. So Dow Jones will be seen either 65% or 70% bullish. Okay, and this is more than the S&P 500. Right, and but this is good. This is actually good for the entire market, and I've repeatedly in the last week I've repeatedly mentioned to my Patreon community members that as long as Dow Jones is holding, sustaining and closing above 43 3xx, there was a little zone, okay, Monday, Tuesday, Wednesday, for continuously for 3 days. Okay, it was holding even on Thursday. During the heavy fall, it was holding until last hour. It was holding, sustaining, okay, back to back closing above the zone. Okay, Thursday it closed below the zone, but yesterday it again closed above the zone. So it has negated the bearish effect or impact of Thursday. Okay, it is holding, closing of the zone. It will remain good, and it is not just about the Dow Jones, because when the Dow Jones remains in this condition, then it will help the entire market, including the S&P 500 and the Nasdaq, okay, to remain bullish, to sustain bullish. Even if there comes bearishness, then also to recover from bearish to bullish. And now the Dow Jones has reached to a junction of the moving averages. Okay, so in the next week, when the Dow Jones recovers, moves above the junction, sustains above the junction, then it will help the S&P 500 to recover this moving average, okay, and to sustain above the moving average. And also at the same time, it will recover the zone that is around 6,000. Okay, it will help recover the zone. Once the S&P 500 also recovers the zone, then there will be more bullish movement, but that bullish movement will not confirm the short-term trend change. Short-term trend, it will remain bearish. Okay, so we need at least Monday closing, one more candle on Monday closing, to confirm whether the S&P 500 will enter into the neutral trend or will remain bearish. For now, bullish is not there. I'm talking about bullish trend. Okay, it can trade bullish, it can remain green, okay, or so, but the trend will not change to bullish. Trend will remain either neutral or bearish. Okay, but if there comes back to back like minimum 2 or 3 closings, green closings, okay, not green but closing above the moving closings above the zone in the S&P 500 by Wednesday. And because next week is blank, okay, so that is again a favorable condition to the market. If the market recovers, S&P 500 recovers the zone, then highly likely by Wednesday it will sustain, and then the trend will be neutral for sure. Then the trend will start to change from neutral to bullish. But guys, whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 and the Dow Jones, which I give to my Patreon community members every day from Monday through Friday. Monday, Tuesday, Wednesday, Thursday, Friday, every day. Pre-market analysis. Pre-market analysis is given 1 or 2 hours before the open of the stock market. Midday update. Midday update is given after 3 hours. Final update is given before the closing of the stock market. And that's not all, because yesterday I have given an opportunity in Google, a big opportunity in Google, okay, in a manner that I have mentioned everything. If you want to buy, if you want to trade in the stocks and futures, then you should buy any price below this mark, okay, and then the target will be this one. But if you want to trade in options, okay, then buy call option. And other than that, I also gave these the midweek update. Midweek update is basically a technical analysis which I gave every Wednesday, Thursday, and I help my Patreon community members to understand what is going to happen on Wednesday, Thursday, and Friday. Okay, in a very precise manner. And other than that, I gave the stock market opportunities in the premium stocks every week, minimum 5 to 10 every week in the top 30, 40 companies of the US stock market, premium blue chips. So guys, if you also want to get these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see 3 levels or 3 tiers. Okay, these 2 levels are same. The only difference is the geographical difference. Okay, so when you subscribe to either of these two levels, then you will be getting all midweek update videos, okay, every Wednesday, Thursday, and the daily S&P 500 analysis, updates, movement, levels, zones, and the stock market opportunities, minimum 5 to 10 every week. But when you subscribe to this level or this tier, then you will be getting whatever is mentioned here, you will be getting here in this tier by default. Other than that, through a one-on-one Zoom session, I will teach you the market secrets, market hacks, and the trading strategies. So I will tell you entry and exit secrets, and I will give you one premium hack which works with almost 100% accuracy and 100% of the time. One trading or options strategy every month. Again, this strategy works with 100% accuracy and 100% of the times. Okay. Then the modified technical indicators. Okay. And then the options premium calculator, because more than 95 or 99% people, they do not know how to calculate the value, the premium value of any option, and they are trading blindly. So through this tier, you will get much more than what you are expecting or anticipating. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, and the stock market opportunities in the premium stocks, blue chips, and the midweek update, and a lot of things. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one entire day, one full day. Okay. Now let's first discuss the candle. So it's a heavy bullish candle. This is the last candle. Okay. But the problem with this candle is that the closing of the candle is below the open price or the high of the previous very heavy bearish candle. That is why a gap up open is not confirmed. It cannot be confirmed a gap up open. But yes, what can be seen or what can be confirmed is that irrespective of any open on Monday, because I'm talking about the daily candle. So on Monday, not Tuesday, Wednesday, Monday. Irrespective of any open, there will be an initial or intraday bullish movement in the market. Now let's talk about the Dow Jones. Now, in case of the Dow Jones, once again a heavy bullish candle. Okay, but because for 1, 2, 3, 4 days, 5 days, okay, almost 4-5 days, okay, it was holding strongly, sustaining at 43 3xx zone. Okay, closing was also above the zone, and then it failed in last hour on Thursday. Okay, it closed below the zone, but yesterday on Friday it closed above the zone and above the open price of this the candle or of last 5 candles. All of this allows and indicates a gap up open in the Dow Jones, or irrespective of any open and initial or intraday bullish movement in the Dow Jones. Dow Jones is in very strong bullish condition as compared to the S&P 500 on the Nasdaq. Okay, but this does not mean that the Dow Jones is in the bullish trend. No, it is not in the bullish trend. Okay, it is also in the bearish trend. Okay, but this is a bullish retrace in the bearish trend. Okay, once again, when I say the bearish trend, it is a short term bearish trend. Short term means maximum for 1 or 2 weeks. That's it, not more than that. Okay, but now whether this bearish trend will continue or not, it will be clear as early as on Monday. Okay, Monday it will be quite clear whether it will enter into the neutral trend or will remain bearish. Okay, so now what we have seen is that on Monday, irrespective of any open, okay, through both of these indices, S&P 500 and the Dow Jones, irrespective of any open, there will be an initial or intraday bullish movement. Also through the weekly chart of the Dow Jones, an initial or intraday bullish movement. Okay, only through the weekly chart of the S&P 500 an initial or intraday bearish movement, otherwise bullish. Okay, so what does this mean? This means that on Monday, irrespective of anything, even if there comes a fall, okay, then that fall will be limited, okay, and there will be heavy chances of seeing the recovery of the fall and the bullish movement. Okay, but how far it can go, okay, or if it will remain bearish, it will depend, or it will be seen through my levels simply. Okay, through my levels it will be very much clear, okay, to what level it can come down, and to what level then it can recover. So now the technicals of the S&P 500 first, and then the Dow Jones. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And guys, so far, if you have liked this video, then hit like to appreciate my work. And if you also want to get these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, one more thing I forgot to mention, that if you want to learn the hacks and the modified technicals and the options explicitly, then you can visit the shop section on my Patreon page, and you will find all of these, the programs or the products listed there. Let's analyze the technical indicators. So technically, moving average is bearish. S&P 500 is bearish through the moving averages. S&P 500 is bearish through the Bollinger Bands. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is heavily bearish through the MACD. Heavily bearish. Okay. And also the S&P 500 is yes, now it has started to trade bullish, but still the value of the stochastic RSI is very less. That is why it will also seen as bearish. Okay, so overall no saturation, okay, nothing, no overbought, no saturation. Overall the S&P 500 will be seen as 90% bearish, right? You might be thinking, okay, it is 90% and now it will be coming down heavily. No, it will not come down. It will not come down, and it is not expected to come down heavily. There is a technical reason. Okay, but before that, let me cover the Dow Jones. Now Dow Jones bearish through the moving averages, bearish through the Bollinger Bands, bullish through the Ichimoku cloud, and bearish through the MACD, and kind of neutral or bearish through the stochastic RSI. Okay, but Dow Jones is a little means it is little less bearish as compared to the S&P 500. Dow Jones will be seen as 80% bearish. 80% bearish. Okay, whereas S&P 500 is 90% bearish. Okay, now the market is so heavily bearish in the short term, and the short this the trend. Okay, the short term trend is bearish. The short term trend is bearish. Okay, so if the short term trend is bearish, everything is bearish, then why I am saying that it cannot come down heavily? Okay, or it is in a kind of compulsion that it should retrace. And why with so much of confidence I've repeatedly mentioned on Friday to my Patreon community members that the bearish side will remain limited and restricted to 585x zone, and even if there comes a breach of this the zone, then that will be limited, and S&P 500 will be in a condition to recover the zone. So the reason for that is once again is the MACD. So if you have subscribed to my YouTube channel for last many months or years, okay, then many a times this kind of condition was seen, wherein I have mentioned that now means if it was bearish, then now there will not be any more bearish movement. Okay, it is a blessing, although it is bearish, but it is a blessing. Okay, problem and a blessing means it will get a bullish reversal. If it is bullish, then it will come down. Okay, in this manner. So what happening is here is that there is a heavy divergence in the MACD. You can notice heavy divergence in the MACD. So yesterday on Friday, when it was trading red, then this divergence reached to the historical levels. Okay, so that is why yesterday again and again in all of the updates I mentioned to my Patreon community members, okay, even in the question and answers, that no more fall, no more bearish movement, rather it will sustain, recover the zone, it will trade above the zone. Now, this heavy divergence in the MACD the MACD is not allowed. Okay, what does this mean? This means that the MACD, this means that now the movement was negative, bearish. Okay, now in order to come out of this heavy divergence, there must come one or two bullish candles, not normal but good bullish candles. Okay, this means that Monday there will be a good probability, heavy probability of seeing a green candle. Okay, and then the same will be repeated on Tuesday, depending on how much convergence is seen. Okay, or if it is still trading in on those the divergence levels as seen historically. Okay, so until and unless the MACD converges, I'm not saying that it must come down like this, okay, so close. No, I'm saying that it should converge, and that will take minimum of 2 days, minimum 2 days. This means that in these next 2 days, Monday and Tuesday, okay, market is allowed to sustain and is also allowed to remain bullish, trade bullish, and close bullish. This means that the fall will be limited, because any more fall in the S&P 500, okay, will increase the divergence further in the S&P 500. And I think this divergence is very heavy in the Nasdaq, because Nasdaq was heavily affected, because only the tech primes were down, and Nvidia was heavily down. Nvidia is the top contributor to the Nasdaq. So the weightage of the stocks in the Nasdaq is different from the S&P 500. Okay, and in that case, okay, you might also want to ask a question that if that was the case, then on Thursday, why the Dow Jones did not come down heavily as compared to the S&P 500? The reason is simple, because Nvidia is not the part of the Dow Jones. Okay, that is why I repeatedly mentioned on Thursday that whatever happening in Nvidia will not affect or impact the Dow Jones. Dow Jones is safe. Dow Jones is the only index which is safe. Okay, yes, if the Nvidia will impact the other tech indices like Microsoft, Apple, and Microsoft and Apple are the part of the Dow Jones. So when Microsoft was 1% down or 1.5% down, similarly the Apple, then only the Dow Jones came under a little pressure. Okay, just under a little pressure, but not heavy. And Dow Jones was down only 0.4% on Thursday, when the other indices were down like 2%, 3% or so. So now that I mentioned, okay, because of the MACD, more fall is not allowed. If more fall happens, then there will be more bullish movement. Now this bullish movement will be limited to the moving averages and the zone. Very simple. Okay, then that zone will define, okay, what will happen next, okay, and what is going to happen next. But guys, whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 and the Dow Jones, which I give to my Patreon community members every day from Monday through Friday. Monday, Tuesday, Wednesday, Thursday, Friday, every day. Pre-market analysis. Pre-market analysis is given 1 or 2 hours before the open of the stock market. Midday update. Midday update is given after 3 hours. Final update is given before the closing of the stock market. And that's not all, because yesterday I have given an opportunity in Google, a big opportunity in Google, okay, in a manner that I have mentioned everything. If you want to trade in the stocks and futures, then you should buy any price below this mark, okay, and then the target will be this one. But if you want to trade in options, okay, then buy call option. And other than that, I also gave these the midweek update. Midweek update is basically a technical analysis which I give every Wednesday, Thursday, and I help my Patreon community members to understand what is going to happen on Wednesday, Thursday, and Friday, okay, in a very precise manner. And other than that, I gave the stock market opportunities in the premium stocks every week, minimum 5 to 10 every week, in the top 30, 40 companies of the US stock market premium blue chips. So guys, if you also want to get these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see three levels or three tiers. Okay, these two levels are same. The only difference is the geographical difference. Okay, so when you subscribe to either of these two levels, then you will be getting all midweek update videos. Okay, every Wednesday, Thursday, and the daily S&P 500 analysis, updates, movement, levels, zones, and the stock market opportunities minimum 5 to 10 every week. But when you subscribe to this level or this tier, then you will be getting whatever is mentioned here, you will be getting here in this tier by default. Other than that, through a one-on-one Zoom session, I will teach you the market secrets, market hacks, and the trading strategies. So I will tell you entry and exit secrets. And I will give you one premium hack which works with almost 100% accuracy and 100% of the time. One trading or options strategy every month. Again, this strategy works with 100% accuracy and 100% of the times. Okay. Then the modified technical indicators. Okay. And then the options premium calculator, because more than 95 or 99% people, they do not know how to calculate the value, the premium value of any option, and they are trading blindly. So through this tier, you will get much more than what you are expecting or anticipating. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, and the stock market opportunities in the premium stocks, blue chips, and the midweek update, and a lot of things. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis, which is for the week of March 3rd. Means from March 3rd, which is Monday, through March 7th, that will be Friday. Now here I will tell you what is going to happen in the S&P 500, Dow Jones, and in a manner to the entire market in the next week from Monday through Friday. So now before I discuss this, let me remind you that I have already covered the reason why there will be a bullish movement. Okay, and initial intraday bullish movement. Okay, and the pattern, okay, through the candles in the daily and the weekly chart section. So if you have skipped these two sections, then I recommend you to watch these two sections so that you can understand whatever I am going to tell here, the movement, okay, why that will be there and how it is going to work. Now the next week is blank. Okay, blank means no earning, no data, nothing as such which is significant to the market. On Friday there will be non-farm payrolls data, and that will be the only data or the event, okay, that can influence the market, but that will be on Friday, on March 7th. Okay, not immediately. So in the immediate term, there is nothing as such. So it will remain blank. Okay, this means that the heavy divergence in the MACD on the daily chart, okay, it allows bullish movement, and this bullish movement, okay, as of now cannot be restricted through any data or the news. But yes, it will be restricted through the levels, numbers, the zones. So far, if you have liked this video, then hit like. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now in terms of the movement, what we know is that S&P 500 will be heading to the zone. Okay. First, there comes the psychological mark, 6,000. Okay. 6,000. Before that, my resistance level is there. Okay, that is at 598x. Okay, so 59. If the S&P 500 moves up and it struggles, see, S&P 500 will move up. This is what we know. Okay, it will remain bullish or it will trade bullish. Okay, not for the entire week, but as long as the divergence in the MACD is covered. So once the divergence of the MACD of the S&P 500 comes in line, okay, it normalize, okay, then only, okay, this condition will be out of the picture. But until then, the bullish movement will be there in the picture. Okay, this means limited fall but more bullish side movement. But to what levels or zone this the bullish side movement will happen, it will be defined by 598x level. Okay, because earlier it was the for last 4 days, around 4 days. Okay, it was actually the 598x level that have defined the fall in the market continuously for 3 days, and the S&P 500 will struggle at 598x. Okay, but is not expected to give up from 598x. Okay, because it will breach after some struggle. See, with or without struggle, okay, at 598x it will breach and it will move to the 6,000 and then the zone in 602x. Okay, now the moving averages on the daily chart are also, okay, around these levels, okay, or the zones. This means that, okay, in short, this means that movement to 6,000 or a little beyond 6,000 can happen. The movement will be limited to the 602x zone, which is around 602x, and this the zone around 602x will tell us whether there are any chances for the near term neutral trend, okay, or if it will remain bearish, because this around the zone 602x, around the zone, okay, there are chances that it will move up and then it will come down. Okay, or there are chances that for 1 or 2 days it can move up, it can sustain or remain around the moving averages and the zone. Okay, and in that, then in these 2 days the divergence of the MACD, okay, it normalize, and once that happens, then S&P 500 will be technically allowed to give up, to come down. Okay, so see, the S&P 500 and the Dow Jones are already in the short term bearish trend. Okay, and what happens, okay, in these cases, the market eventually align itself to the trend. Okay, this statement is true for the bullish or the bearish trend, and that is why I mentioned that the short term bearish cycle wherein the market S&P 500 Dow Jones will be allowed to move up to some point. Some point means these the level zones, and then it will come down heavily. Okay, so bearish cycle only when the S&P 500 clears the zone, this zone which is around around the 602x. When it clears the zone, sustains above the zone, closes above the zone. Closing is very important, because only the closing can tell us if the trend has changed or not, if there will be a gap up open, gap down open, or whatever to be predicted. Okay, it can be predicted through the closing. The true movement of the market is always known through the closing. Okay, and this is true for the entire market, right? So once there comes a closing, in that case, what will happen? In that case, from the short term bearish trend, the S&P 500 and also the Dow Jones will enter into the neutral trend. Now this neutral trend will be there, but it will be more bullish, not bearish. It will be more bullish, because once it enters into the neutral trend, then it will indicate that now most likely, highly likely, the trend will then change to bullish by the end of the next week. Okay, means by March 7th, okay, it can change to bullish. Okay, but if the movement, bullish side movement, remains slow, in that case we will have to wait for the next week, okay, for this the actual trend to change. Okay, now this brings the the zone, the all-time high, the peak back into the picture. So I predicted the peak, all-time high, okay, to be in the zone which starts from 614x, and the all-time high of the S&P 500 is 6147.43. But this is not the level, the resistance level. Okay, so this is what I'm saying since October 2024, that the all-time high or the peak will be in the zone. Okay, when the S&P 500 hits the 614x, then it will be considered as like it has hit the all-time high, its peak, and now it is going down, it will come down. Okay, but at the same time, in the previous S&P 500 weekly technical analysis also I mentioned it will get one more chance to test the zone, but for that to happen it will have to sustain and to recover and to remain above 604x. 604x. Now this 604x is not equal to 614x, and these two are different, entirely different. Okay, these two levels are different in terms of the numbers, okay, and then in terms of the functionality. So once the S&P 500 recovers the zone which is around 602x, then it will open the door to 604x level. Now this 604x is a level, it is not a zone. Okay, whereas this 614x is a zone. Okay, it is a level and this one is the zone. So this is the major difference. Now once it recovers the 604x and once there comes two consecutive closings above 604x, then it will enter into a condition wherein we can say, okay, now it will be heading to the expected peak once again. And also guys, remember, on Friday, the S&P 500 closed below the 604x for the first time. In my weekly technical analysis, I have mentioned that if on Monday S&P 500 closes below 604x, then there will be two consecutive closings below the 604x level. This means more fall, more bearish movement. And any bullish movement will then be limited to the 604x itself. Okay, that will be the best case scenario. This means that after gaining the zone, what zone? This is the zone which is near to, I'm not saying it is 602x, I'm saying which is near to 602x, the S&P 500 will come into a condition, will come into a position to gain 604x, but it will have to struggle because it has already lost. There were two consecutive, not two, 1 2 3 4 5 6 closings below the 604x. Okay, it will struggle. Okay, but now I'm talking about a closing, because once it comes above, once it sustains and closes above the zone which is around 602x, then it will gain momentum, and this momentum will help the S&P 500 to try for 604x again and again, and eventually it should be able to gain the 604x. Once there comes the first closing above 604x, then we will wait for the second closing, just like we waited for these two closings here on 21st February and 24th of February. And once that was clear, then we have seen this heavy fall, 3 to 4% fall. Okay, once there comes two consecutive closings above the 604x, it is now ready for the to test the zone, and also at the same time it is either neutral or bullish. Okay, no bearishness. Okay, then all of that bearishness will then be limited to the zone which is around 602x itself, because the moving averages are already there around the zone, okay, or around the 6000 mark. So these are the moving averages, the value will change every day. So okay, if you are my Patreon community member, then I will update, okay, that what will be the lower level zone support, heavy support, okay, and then a bounce back from here, okay, and so these are the conditions here. Okay, now in the next week I cannot confirm if the S&P 500 will be able to move and to hit 614x. The heavy bullish movement may happen. This may happen because of the MACD, heavy divergence in the MACD. Because if there comes heavy bullish movement, then only the divergence will normalize in the MACD. Okay, so see, this is the magic of the technicals. So, but if there comes normal bullish movement, then this divergence will take 3, 4 days, 5 days to normalize. Okay, that is why 604x, yes, 604x, yes. Okay, 614x zone, which is the expected peak of the season. Okay, so far it has proven itself. I cannot confirm for this. If maximum, if it try to move up, then from the last closing that was 5954, 2% or 2%, around 2%, 6100, you can say. 2% is fairly possible, not a problem. 6100, yes. But for the 6100 to come into the picture, two closings above C 604x, okay, it is a must, it is a condition, must, it must happen, otherwise not. Okay, but at the same time you must understand that S&P 500 cannot move up, okay, if the Dow Jones doesn't support the bullish movement. Not just the S&P 500, but any index, okay, any other small or big index or the ETFs, okay, they cannot move up without the help of the Dow Jones. But the good thing is that the Dow Jones is strongly sustained, okay, at my this is the zone that was 43.3xx. And if you are thinking that it was because of the Ichimoku cloud, then no. Okay, Ichimoku cloud was one factor, but below the Ichimoku cloud there was my strong support level, very strong support level. Okay, that is why I mentioned again and again this, the closings. Okay, yesterday Dow Jones closed in a very strong condition, okay, bullish condition. Now only the Dow Jones on the daily chart is indicating a gap up open and nothing else. Now if on Monday there comes a gap up open, a real gap up open, and the Dow Jones opens above 44,000, because when it opens above 44,000, then it will clear the moving averages. Okay, after open it can test the moving averages, but it is expected to sustain because of that heavy divergence in the MACD. Okay, now when it remains bullish, when it goes bullish, then the market, the entire market, okay, then there is no fear, the market will come in a very sustainable, very good bullish condition. Okay, because then the Dow Jones will be moving up, okay, and then that will help the entire market to sustain and to remain bullish. However, the Dow Jones fails to clear and sustain above 44,000. Okay, although there is a my calculated level above 44,000. Okay, so I will stick to my level, not 44,000, but for your understanding, just 44,000. If the Dow Jones remains below 44,000, remains below the moving averages or inside the moving averages, not good, not good, not good, because it can bring some more fall in the S&P 500 and in the entire market. Okay. Yes, I agree that that will further increase the divergence in the MACD, heavily increase it will, that divergence in the MACD. Okay, but still that fall can happen. But yes, what we know is that this fall will not be heavy. No, this fall will be normal, will be limited, will not be heavy. Okay, because now the market is not in a condition to give this kind of heavy fall. It has already given heavy fall. Now it is in the cycle, it will move up and then only it will come down. Okay, if it fails to change from neutral to bullish, then okay, then you will see this kind of staircase pattern. Okay, and then again and again it will, and then eventually it will enter into the correction, and then from the correction to the recession. Yes, the recession. Earlier only correction was anticipated. Okay, that was the worst case scenario, but now the recession is there. Why? Okay, obvious reason. Okay, tariffs, okay, they were not in the picture. Okay, feds are holding the interest rates. This is putting more pressure on the economy, and the Fed chairman, his tenure will end in May 2026. Fed chairman and the head of the state, the president, okay, there is no consensus between the Fed chairman and the recently elected president. Okay, so there is no consensus. They are thinking differently. Okay, president want to raise, increase tariffs, not increase tariff. He has already increased and has this is now in effect. Okay, whereas the Federal Reserve and its members and the chairman is not ready to cut down the rates because these tariffs, okay, and his comments are increasing. Okay, heavy uncertainty in the market. Market was already the Feds were already heavily uncertain about the economy. Now now this one, okay, recently elected president has added more uncertainty into to the uncertainty that was already there. Okay, increase in tariff means more pressure, means inflation will move up. Feds are trying to bring the or to keep the inflation down. So means Feds are not going for any more rate cuts. Feds will not go for any more rate cuts. This will increase the inflation. Okay, more layoffs, more firing. Okay, and so recession is the inevitable scenario. Okay, as of now. Market, the stocks and the market, the entire market, not just, I'm not talking about the US stock market, but the global stock market is at extremely high valuation. Okay, extremely high valuation. If you check the PE ratios, okay, price to earning ratio, then you will find very high. Okay, so that is why there is a perfect recipe. So it is a perfect recipe for a heavy fall and the recession, which was not there but now is in the picture, and kind of now is kind of inevitable. Yes, if the feds go for rate cuts back to back, 2 or 3 rate cuts or 4 rate cuts, then this can then subside some of its impact. Then there will be a scenario somewhere between correction and recession. Okay, but if the Feds stick to their plan, only 1 or 2 rate cuts this year, then recession in the global economy and the markets which are heavily inflated, like European market, okay, Asian market, in the Asian market, especially the Indian market. So yes, these two markets, the European and the Indian markets, okay, these are heavily inflated, heavily overpriced. Okay, these two will be impacted heavily, very heavily. Okay, US stock market definitely, okay, it will be impacted, but not much as compared to the European and the Indian market. Now, yes, that was the bullish side. Okay, so we need not to worry about these recession correction or these things, because recession is the best time that people actually wait for many years, so that they can make a tons of money in very short period of time. Okay, because of these heavy falls, okay, they make a lot of money, tons of money. Okay, that is why I'm saying that no need to worry about the recession. Just trade carefully, know the numbers, levels, okay, these the reversal and these things, and that's fine. Okay, then it doesn't matter whether it's a recession, correction, or the bullish run or anything. So if you have any views on the correction or the recession, or if you think, okay, I might have missed something, then please comment and share your thoughts. Now let's talk about the bearish side movement. The bearish side movement is very simple, because the market S&P 500 is already in the short term bearish trend. Okay, now all it needs is the rejection from the zone. That's it. Either a rejection from 6042, okay, or a rejection from the zone which is around 602x. The bullish movement will happen. This is what we know. Okay, let me clear this again. The bullish movement will happen. This is what we know. Okay, but the bullish movement will be restricted to these the levels and the zones. This is also what we know. Okay, now this zone, the moving averages will define whether there will be a neutral trend, whether there will be a neutral trend which will then eventually convert into the bullish, or it will then eventually, okay, it will come down. Yes, so this means that we should be careful. We should be careful when the S&P 500 starts to trade above 598x level, because I share the levels and the zones, the precise these levels and zones only with my Patreon community members. So for you, it will be 6,000 mark. It is also the psychological mark, okay, considering all other factors. Okay, so you can say just around 6,000. If the S&P 500 struggles, fails, remains below 6,000, means it will re-enter into the short-term bearish trend, will be in the bearish cycle. If it remains above 6,000 mark and also clears the 602x, means the zone which is around 602x, then in that case it will try for bullish, and then the bullish condition to closings above the 6042. Okay, and below 6,000 means it will remain bearish, short term bearish trend. Simple, it will remain in the short term bearish trend in a manner that we will see this, okay, this kind of staircase pattern. And then comes the same, okay, in the Dow Jones, okay, it will the same will be seen, or the same will happen in the Dow Jones. But now when it comes down, then to what level it will be coming down? Again the zone will help. What zone? 585x zone. There is a zone, very heavy zone. This zone has helped the S&P 500 yesterday. That is why again and again with 100% confidence I have mentioned this to my Patreon community members. No bearish. Bearish is restricted. It will recover. It will trade bullish. Means it will trade above the zone. Okay. So the zone, any fall will be restricted, will be limited to the zone itself. What will happen? So I do not see a reason why it should give back-to-back heavy fall trade below, because MACD is already very heavy bearish. The divergence is very heavy in the MACD. Any more fall will increase that heavy divergence in the MACD. And a very heavy divergence in the MACD means what? A very heavy divergence in the MACD means something like this. Okay, not like this is dull movement, dull bullish movement, but something like this. Heavy bullish movement, heavy gap up open. This, although this was because of this was seen after the results of after the election results. Okay, but the extremely heavy divergence in the MACD means something like the same scenario. Okay, 4% or 6% bullish movement within 2 to 3 days. So you need to understand this, the concept, and the same is true and the same is applicable when there comes heavy divergence in the bull side. It happens in the bull side, then you will see very heavy, extremely heavy red candles. Okay, 2 to 4%, 6% fall in 2 or 3 days. So chances are very low, less than how much? Less than 10%, 10%, 15%. Okay, so I will keep it less than 10-15%, that it will come down, trade again and again to the zone, or it can trade below the zone. Again, chances are very less, very less. Okay, yes, it can happen only if on Monday, Tuesday, Wednesday, at least on 3 days S&P 500 remains bullish, not heavily bullish but normal bullish. Okay, or normal red candles, very little red candles. Okay, or some good bullish candles. It remains above 59, what was the closing? 5954.50. It remains above this, the closing, for 3 days, Monday, Tuesday, Wednesday, because in that case it will help the divergence to normalize. Okay, the MACD divergence to normalize. Okay, and we can include the Thursday also. Okay, normalize. When the divergence normalizes, then by Friday, Thursday I'm not sure, but Friday in this case, only in this manner, 1, 2, 3, 4 and then 5. Okay, only in this case it is allowed, because when the divergence will normalize, then it is allowed to fall. Okay, now what will happen? It is not expected to happen instantly, but what will happen if the S&P 500 loses 585x either in this week or the next to next week? In that case, be ready to see 7, I think that will be 5,700 itself, or somewhere around 5,700. Okay, so there is a level that I will mention, okay, when this will be seen. Otherwise, for now I am anticipating bullish side movement, hold or more sustainable bullish side movement, limited bearish side movement. Limited bearish side movement will be, means a recoverable limited bearish side movement. This statement is valid on Monday and Tuesday heavily, because divergence is heavy, and if there comes more fall, then there will be heavy bullish movement in the market. At the same time in the Dow Jones, but guys, before that, so far if you have liked this video, hit like to appreciate my work. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. In terms of the Dow Jones, now any fall in the Dow Jones will be limited to 43.3xx. And remember, the S&P 500 cannot come down heavily, or the Nasdaq cannot come down heavily if the Dow Jones is holding and sustaining. If the Dow Jones is holding and sustaining at the zone, fine, everything will be okay or good, okay or good. Okay, no bearish side, no fear, no nothing. Okay, if this situation changes in the Dow Jones, then S&P 500 Nasdaq won't be able to hold. So in this manner, the bullish movement is allowed up to 6,100 and the bearish movement to a maximum of 585x, but still 585x is not expected because of the heavy divergence in the MACD, and also the Dow Jones is expected to sustain at 43.3xx, and S&P 500 is now heading to the cluster of the moving averages, is now completing its staircase pattern. This staircase pattern will tell us whether it will go more bearish or will sustain, will recover, and will retry for the peak, the expected peak or the expected high. So guys, I hope this is clear. But if you have any questions that you want to ask, then you can ask your question through the comment section. So guys, once again, I have given the link to my Patreon community in the description of the video and also in the comment section. You can follow that link, you can join my Patreon community, and you will be getting the daily updates from Monday through Friday every day. And also don't forget to hit like if you have liked this video.